Apple, Alphabet, and Amazon all posted Q4 results overnight that left a sour taste in investors' mouths. Meta, on the other hand, gained 23% in the last trading session. And here to help us navigate big tech is Chief Market Analyst at Capex MENA, Fadi Reyad. Thanks for joining us, Fadi. Now, we saw tech stocks rally in January, and now we have these disappointing results. Did the market get ahead of itself?
Well, the number one rule in the markets are always pricing ahead. So that's pretty much what happened. So markets were betting on, not only a slowdown in increasing the interest rates from the Fed, but also a hinting from Jeremy Powell that we will be having a cut off the interest rates this year, which didn't happen on Wednesday. So that's on one point. Another thing, I do believe that the markets were expecting worse than the earnings that we have seen. Meta, Amazon last night, Apple, Alphabet, all of them did not had a really good earnings, but nonetheless, the markets, I do believe, were expecting a worse earnings than what we have seen. That's why I do believe it's we can call it so far a justified rally, and I do believe we will continue to have the current rally in the upcoming weeks.
So you don't expect these big tech stocks to drag the market down tonight as well? And if they do, could this negative sentiment last for much longer?
Well, it might drag the markets down, but let's just notice that Nasdaq is up almost 18% from December low. So basically, I do believe the most important thing is to watch here is the upcoming data. Ever since Jeremy Powell started to increase the interest rates back in 2022, he did highlight that all of the decisions will be data independent, which means that we will be looking at labor data and along with the CPI data. So basically, I believe the most important for the markets will be the next CPI, and we will be having a couple of labor reading till the next Fed meeting. So I think this is very important for the markets than the current earnings that we're having. Even if we have a 2% drop, but nonetheless, I do believe data will be much more important for the markets.
And what more do investors really need to see here? I mean, big tech has already cut thousands of jobs and reduced costs in other ways. What needs to happen for the market to make a full comeback?
Exactly. That's what I was just mentioning, because both the investors and the markets obviously are not afraid of the slowdown in the economy as we were expecting back in 2022. So the most important factor will be the next reading for the CPI, and I think it's going to be super critical for the decision both for the Fed and for the markets. And why is that? Just simply because it's not only important to see a drop from 9.1, the peak in 2022 in the inflation, till 6.5, the last reading. We want this to continue.
And what sectors and companies are you bullish on right now? Is it too late to buy Meta after it gained 23%?
Well, it's never late to buy a good stock. Meta was called a broken stock just a couple of months ago. So I do believe the big tech will remain to have the bigger chance for further increase if we but this is tied to one condition: if we can see that the inflation is continue to drop, which will lead the Fed to slow down even more on increasing the interest rates. So I think big tech have the bigger chance in terms of the the drop that we have seen, almost 35% drop in the 2022. So I do believe that big tech will remain the big focus for the most of the investors this year.
Lots of opportunities there. Okay, thanks so much for joining us. Chief Market Analyst at capex.com, MENA, Fadi Reyad.